Good morning, traders. Todd here, Trading Analysis. Happy Wednesday. Thanks for joining us. We got the TA team standing by. We'll just kind of take you through the open here. Happy Wednesday. Let's see, February 10th. And futures are up again because that's what futures do. They just go up. I feel like Portnoy. Stocks just go up. We'll talk about this a little bit here just in the opening comments. We got a good show, lot to talk about, a lot of new uptrends, a lot of, crazy stocks and sectors and industries, more so industries and very niche kind of stocks that are all the, that are older age here, that really don't have a big impact on where the broader market's going. So it's very much a trader's market. It's been a lot of fun, trading this. I think, those of you who've been trading for a while, when you guys first wake up, what do you do? Do you roll out of bed and grab your phone and just check the S&P futures and see what the NAS and see the S&P and Russell futures, bonds, gold, dollar, crude did overnight? I don't really do that anymore. Check Bitcoin, check GameStop, see where AMC is. I mean, it's pretty unbelievable. So, we're in the midst of an earnings season that's been awesome. Good quote from Yahoo this morning. I think 81% of the companies have beat expectations by an average of 15%. So earnings have been extremely strong. We're in earnings right now that are in pre-pandemic level, and this is even before the stimulus was out. And we're looking at another stimulus bill coming down. So companies are making money. This narrative that the tech sort of evolution that we were predestined to be on, or we were already on, was just accelerated by COVID. And I'm hearing more and more people start to say that. I think I was one of the earlier ones to say that on CNBC. So it's unfortunately, there's been a lot of damage done by the pandemic, but unfortunately markets are efficient, the economy is efficient, and capital flows to where it needs to go to get us through. So market looks good. I've got a fully long portfolio here. We have liquidity in the system, the Fed that is very much on hold, strong earnings season. Trust me, I hear my bullishness, but freaking stocks just keep going up, man. This is a market I've been trading for 20 years now. I started in 2001. I got out of college in 2001 and I was a professional trader in 2001 in San Diego. And I've been working on a lot of discipline and trying to buy pullbacks and trying not to chase. But, in this kind of market, you almost have to set your disciplines aside and not be afraid to buy new highs. And that goes with Bitcoin. That goes with, stocks that are moving. I mean, I've got a short still in GME. I'm just selling lows. I'm still short GME. I'll show you that position. You have to be okay and trust the trend. Sometimes you just have to throw caution to the wind and say, screw it. I'm buying new highs because I feel that this market is going higher. And I've done that so much. And, I'm being rewarded pretty handsomely in my portfolio. It could reverse on us at any time, and I'm fully aware of that. But I'm going to ride it until she kicks me. So for that, let's see. Cannabis stocks are ripping. We still have Tilray. I sent that tweet out a while ago, and throw in the comments if you caught that Tilray tweet. And one of the team members, if you don't mind grabbing that for me, I should be prepared. I don't know when I issued that. I'm just scrolling through my Tilray tweets here. But a couple of people reached out and said they got the Tilray trade. And basically what we did is we started with a 12.22 call spread in Tilray, somewhere back here, and went up to 22. I bought back my 22s. I sold a 32. So to continue the call spread. So I bought a 12.22. It went through my short strike. So I bought the 22 back, sold the 32. It went up to 32. So now I still have the 12.32 spread, which I think the max profit it could be at is about 10 grand. So I've got the 12.32. Freaking stock is up $10 now. after hours again. It closed at 42. Now it's up 14 after hours at 56. So, I mean, you could just go through any of the, almost any of the names in the cannabis sector. It almost doesn't matter. You know, my friends are texting me and saying, hey, Todd, give me some cannabis names. I just screenshot the names, and I was like, just pick one. So let me just scroll through here. Here's my list of cannabis that we're watching. Just kind of look through as we're going here. Bennett, hopefully, yeah, you're sharing screen. Thanks. So CGC, Kronos, Tilray, ripping up through all weekly moving averages. GRGW, awesome. In the new portfolio for the money management company, I had the GRPH ready to go, but then they got bought out, so we missed that one. Aurora, that one's kind of interesting. A little inverse head and shoulders. Curaleaf, I have Green Thumb straight up. I mean, it's just APHA straight up. HRVSF coming up to the 200-week moving average of 5. There's the GWPH. I was going to put this in the portfolio, got bought out. Great. Cara, better. CBDS, that's okay. I mean, there's a ton of them in here. Pick one, and they're all going up. So, you know, obviously we're moving towards legalization, federal decriminalization. So that's fun. The solar energy stocks are taking a little bit of a breather here, but I do think they are going to continue to go. Take a look at Plug Power, a little consolidation here on the daily. I think that's probably ready to go again. Still hold and run. So it's just like, I guess my point of my opening ramble here is there's a lot of stocks that don't have a big impact on where the S&P is going. And if you're focused on these high-flying names, I mean, there's money to be made in here. Other news is Bitcoin and Tesla. I'll talk about that here later in the show. Big news. Elon putting $1.5 billion into Tesla. Tesla's stable on 850. Bitcoin's going up to about 46. It hit 48. I think it's about 45, 46,000 now. Unbelievable. We put the buy recommendation out on Bitcoin for our members. I don't want to delete that here. So really nice wave for support down there in the 30 to 28,000. Gave it to you guys. I think I tweeted it out. Our members definitely got it. Here is the result. And I'm still long Bitcoin, trying to get up into the 50,000. Well, I'll lighten up a little bit, but I'm going to continue to hold the core. So, you know, there's a lot going on, a lot of fun stuff. So with that aside, be sure to hit the thumbs up button if you don't mind on YouTube, and let YouTube know that you enjoy it. And let's bring in the TA team, see what's going on. Good morning, Terry and Bennett. Alex, as you guys know, I know he's your favorite TA team member. We just don't have room for him in this short 40-minute show. He's got his own show tomorrow at 9 a.m. You can get as much Alex as you want. Basically, Bennett and Terry, we can't keep up with Alex. Would you guys?
Too much content, yeah.
I agree. He just covers too much.
But hey,
he makes us look dumb too, doesn't he?
Private Discord group, the chatter in the crypto channels far exceeds the chatter in the Forex and stock channels. So
hey now.
especially now.
I've been trying to push our active traders.
Bitcoin on the move.
Yeah, that's right. You know,
not just Bitcoin, but as Todd was just showing you guys there, the cannabis sector is certainly lit. No pun intended.
It's unbelievable.
You intended that.
I hope my dad doesn't get mad. I hope my dad doesn't get mad at me for saying this, but I should tweet this out. He tweeted me. I got him in some. He turned me on to Curaleaf a while ago. He's like, Todd, put this in my portfolio, and then I put a couple other in. I put Tilray in, and what did he write? He wrote Curaleaf is doing well. Shares are up to 16. Soon the whole country will be stoned, and all the fighting and bickering will be over. So that sounds about right.
That about sums it up. But yeah, no, it's been an incredible move. It's interesting to look at that chart of Tilray, and the initial move that it had up to 300 after the IPO was just absolutely incredible, and it certainly made a nice move since the lows.
Yes, sirree. It's been fun time. So listen, all the sort of randomness aside, let's have Bennett take us into to the indexes, figure out what's going on. Oh, also, I am on CNBC today at 2:30ish or 2:40ish for power lunch. Just a heads up there. And also, guys, be sure to check out the Trading Nation website. We do a lot of web work. I am trading my live portfolio there, which is cool. For years, I did it on Schwab's platform because they were the sponsor. But now that they bought TD Ameritrade, I can trade my actual TD account. I do that live in Trading Nation. So again, I think I'm the only guy in all of CNBC who trades live capital in real time on that show. And it's been that way for 4 years. I don't think many people watch it, but I don't know. That's fine. Check that out. But we go to the live segment on air 2:30. And I'm just joking. People do watch it. But all right. Bennett, take it away.
Let's jump into it. Good morning once again, YouTube. Thank you guys for tuning in this morning. Already into February, just around the corner from Valentine's Day. Futures looking positive this morning. So let's jump into it. Hard right edge of the chart utilizing the Motive Wave platform. So if you've been following our public video updates or tracking any of my work here on the YouTube live show, you know that I've been tracking the makings for a potential 5-wave completion. However, if you've noticed, I have yet to really act on this or take a large short position into this resistance zone. And the reason being is, although we have a few indications that perhaps we will see some sort of a counter trend corrective pullback, looks like Motive Wave is not cooperating with us this morning. So let's see if we can figure out what happened there. Looks like the GoToMeeting took over my screen. Tech problem. So I do apologize, but I've yet to act on it. Even though we do have signs of a potential 5-wave completion in the dollar, or nearing a 5-wave completion to the downside in the dollar, we have that market internal divergence that we were reviewing throughout the past few weeks. The count that we have here, although it does call for a corrective pullback, is still longer term bullish, which is why, you know, it's really all about time frame when determining how you're going to interact with any sort of these the moves that we outline here. And at the time, you know, with this potential wave 2 pullback, there's a lot of Elliotticians out there who are suggesting perhaps this 5-wave completion, you know, completes the higher degree trend. I don't see that as a possibility at this point. Not only are we very short of typical fib levels, projections, as well as not meeting the right line or the guidelines of the right look, there's a lot that's happened over the past year since the COVID lows. As Todd just mentioned, the kind of rapid move towards a remote workforce. In fact, there was a survey conducted of I forget what percentage of the top S&P 500 companies, but any previous plans that they had to grow their remote workforce has been expedited due to COVID to the tune of about 6 years. So the idea that we are seeing a potential kind of generational breakout here is very it's a very strong possibility, especially given the fact that we're now finally trading, as you can see, outside of this multi-year consolidation range. So if I were to take you over to the weekly chart, you'll notice that the S&P, in fact, the Dow, the S&P, and the Russell, up until recently with the breakout that we've seen in small caps, has actually been in a period of technical consolidation. And we've had lower lows, higher highs, and it's kind of been an expanding volatility pattern since really January of 2018. And where do we find the markets now? Well, the trend line that's been sourced off of those price extremes, it did continue to act as resistance into the summer of last year. You can see the August high here in the S&P was right in line with that upper kind of boundaries of this expanding volatility pattern. That was also resistance on November 9th. November 9th was the day that we had the first positive coronavirus vaccine news. Had a very strong market move that day. What's happened since? Well, we've been in an uptrending, kind of an unusual pattern. We've had a lot of overlap in price action. However, we've been digesting a kind of a breakout from this expanding volatility pattern. And as you'll see here, we've broken through this expanding channel, and we've now kind of back tested it and are continuing to move higher. The markets just do not want to let up. And that's why Elliott Wave is all about possibilities. So while we do have the possibility of a completed 5-wave advance. You can't always look at 5-wave completions and say, oh, that's going to be the end of the move. We're going to see a large corrective pullback. If I take you back to the credit crisis lows in 2009, look at the 5-wave rally that unfolded into 2010. That gave us a sideways wave 2 flat. What happens in the smaller degree trend? A very short, shallow wave 2 correction. So that's why I don't feel it is worth attempting to kind of sidestep this corrective pullback in your longer term holdings. Obviously, a lot of that's going to be heavily dependent on your time frame and when you need that capital. But I remain bullish long term. If we get a pullback, great. If we continue through this upside resistance zone, I'm going to continue to focus exclusively on the long side. I've been a little hesitant up into this resistance cluster, but I have a feeling we're going to have clarity here soon. So let's get into it. Let's get off the daily chart. Let's focus in on everything that's happened since the October 30th low. And then I want to reiterate the bullish interpretation that I have, because I think I don't think many are really talking about that in the world of Elliott, and I definitely think it's something to explore. So the Elliott wave count that we have here gives us a 5-wave completion. And this 5-wave move, typically speaking, we have relationships in the 5th wave position that are typically similar to the move in the wave 1 position when you have extended third. So there's a lot of different relationships of these sequences that we can utilize to determine if this is a trend of the same degree. And the first initial objective was equality of 5 and 1. And that came in at 38.90. We have since broken through 38.90. And if I take you off the daily chart to focus in on price action here, taking you down to a 1-hour interpretation. So you can see the yellow circle just for context. We had a very sharp pullback from the ending diagonal. So we tracked this ending diagonal. We were looking for a pullback. It turned into a wave 4 measured move ABC correction. And if I take you down to the 15-minute chart to really focus in on this 5th wave, you'll notice that wave 5 and 1 equality at 38.90 was initial resistance. We consolidate it, and then we move higher. And while this parallel trend channel is acting as an area of resistance, you can see futures are moving higher this morning. So if we break through this cluster of fib resistance, which is offered from 3 degrees of trend, I might add, then I'll be looking to dismiss the count that calls for a near-term correction and focus on the alternate, which suggests that we have significantly more upside potential in the markets. So let's talk a little bit about the alternate count. Taking you off of my preferred count and over to the alternate, what ends up happening here is we're looking at a very similar count in that we're post 4th wave consolidation from the October 30th lows. However, in this instance, we're looking for a more significant upside fib projection, and that is a 61% relationship of wave 5 compared to 1 and 3. That takes you up through 4,000 in the S&P, 4385 to be specific. And a good example of 5th waves extending above and beyond equality to wave 1, even with an extended third, I can show you here on the weekly chart of the S&P. And what I want you guys to notice is here on the weekly chart of the S&P, we had a 3rd wave that was clearly extended. We had a 4th wave which demonstrated equality to wave 2 and was a typical about 38% corrective pullback. But then let's take a look at if we were to just call wave 5 complete at wave 5V1 equality, if we were to look at that and say that's the end of the trend, we would have missed out on a very significant continuation there in the markets. You'll notice that 5V1 equality at 2383 back in the spring of 2017, it did pose resistance. We did consolidate for a period of time, but then we continued above and beyond, and we continued to another very common upside fib target, and that is the 61% relationship of wave 5 compared to 1 and 3. So looking at that same situation here in the 5th wave position, still of the intermediate degree, taking you off the weekly and down to the daily, the 38.90 price level was the initial resistance zone. We've since broken through that, and in the event that we break through the fib cluster, 39.20 in the S&P, this is the count that I'm going to be looking to kind of focus on because we do have a lot of healthy looking charts that have very significant weightings in the indexes. Amazon's been in consolidation since September of last year, and you can see We have yet to break through those highs. NVIDIA is another name that's been in a sideways consolidation. This sideways consolidation typically resolves higher. So the idea that we do continue and extend to that 61% fib target, up over 4,000 in the S&P, not out of the question whatsoever, especially when you take into consideration price structure and price action in a lot of the leading names and heavy index components. So over to the NDX is in a very similar situation in that we are kind of losing our angle of ascent into this fib cluster. It could yield a corrective pullback. Wouldn't try to sidestep it. I would instead look to take advantage of it if we get it, because in the event that we break through this zone, we have significantly more upside left to go. So, well, I do think we could see a near-term correction. I remain bullish long-term, and if we break through that zone, I'm going to happily be looking to dismiss the count that you see here in front of you and focus full time on the upside of the market. So that's it for me, guys. Back over to you, Todd.
Good work there, Bennett. Yeah, it's certainly. You just got to keep in mind in this kind of environment, that's sort of the theme that we're trying to drive is Elliott wave is very fractal in nature. Just because you see a 5-wave move does not mean that's the end. And that's unfortunately a lot of people who go down that path and start to learn Elliott say, oh, let me count a 5-wave move. This must be the end. And unfortunately, they get out of a winning position prematurely, or even worse, they try to short something, which the biggest thing that comes with experience in doing this time and time again is the fractal nature. It's part usually of something larger. Elliott at its core is a barometer or a measuring stick of human productivity. And this pandemic has forced us to evolve with massive liquidity being put through the system. So we're evolving quickly. So the fractal nature of Elliott, I think, is more important than ever. And the other thing that I heard you mention, Bennett, was the work at home. Did you guys see the Wall Street Journal Salesforce, which has the Salesforce building's the largest building in San Francisco, and they have a massive location in New York. Something they didn't give an exact amount, but a high percent of their workers within 6 years are going to be invited to work part-time at home or full-time at home. So I thought that was on the homepage of the Wall Street Journal this morning. So the work at home thing is real. All right, let's send it over to Terry for sector spin, see what's going on, sector rotation. Super important, as always. We'll do that one sec. I see Twitter's finally up 10% pre-market. Interesting story there with earnings last night and everything. All the pressure being put on Jack Dorsey, but we'll talk about that later. Terry, what's going on in sector rotation?
Hello, traders. I'm Terry Long with your weekly sector focus. I'm going to start last week's performance of the index and sectors here. Last week, we saw the markets accelerate to new all-time highs with all the sectors participating in the advance. The S&P was up 4.65%, the NASDAQ up 5.25%. Now, both sectors actually wiped out all of the decline from the prior week's move. We thought this was the rollover, and boom, there it is. So this is just a continuation of the story that Bennett and Todd are passing on to you there. Don't sell it off too early. Wait for the confirmation in the moves. So bolstered, I think, by rising crude oil demand, and the energy sector led the rally last week, followed by communications, financials, consumer discretionary, industrials, and technology. All those sectors outpaced the overall S&P. In healthcare, utilities, staples, while they were still positive for the week, they remained underperforming. And we can see this week, Monday and Tuesday, we've already got, we had a big gap open on Monday. Both indexes pushed once again to new all-time highs. Yesterday's price action was a little bit more muted, but nevertheless, we've got energy, financials, industrials, technology, communications, and maybe a little bit of real estate outperforming the S&P. So switch over here to our weekly rotation, and our leading sectors in terms of relative strength ratio are energy, financials, materials, technology, industrials, discretionary, and communication. Now, technology continues to climb the list, and it passed communications last week. Now it's passing industrials now. Look down here. We've got communications, technology, and discretionary all have positioned themselves into northerly to northeasterly headings. And this indicates increasing momentum and likely a push back into the leading quadrant. Now, energy and financials, though they produced stellar returns last week, they are seen with declining momentum at this point. So they've got good relative strength. They're holding that, but they are in a momentum decay right now. Industrials and materials, which had been fairly resilient, they've dramatically started weakening, and they continue their southwest heading, indicating a loss of both momentum and relative strength. Over here in this improving quadrant, the advancement that we initially saw in previous weeks in healthcare seems to have slowed considerably. You can see the length of the tail, which represents velocity. The velocity factor is slowed to 0.09 down from a 0.34. So initially we saw a little bit of a surge. I got excited about it, but then not so much anymore. So the staples, utilities, real estate, they continue to underperform. Now there is a little bit of, I'm having a little trouble with my mouse here. There is a little bit of upward momentum gaining in real estate, and hooks have formed here in each of these, but these guys are significantly lagging still. I'm going to skip over growth and value. This week, I'm going to focus directly on the consumer discretionary sector, which is now seen with overall rising momentum. Let me find it here. So it's this one right here. This hook here formed in communication. This one here is the consumer discretionary. So we had a long push down into the weakening quadrant, and now we are accelerating higher. So while there is some internal rotation, you can see vertical drops in momentum, but you've also got vertical rises in momentum in other stocks. This is internal rotation in this sector. What I see here is the larger market cap stocks in this sector are now the ones with the rising momentum. So you've got Amazon, Home Depot, McDonald's, and Lowe's. These guys are the larger market cap stocks, and some of these are smaller market caps. So the big behemoths are going to pull the XLY much higher here. Now let's drill into the industry groups here. The consumer discretionary sector is broken down into about 19 different individual major industry subgroups. And we don't really have the time to assess each one of them here, but I did a little bit of looking, and I want to review a few of these groups which have caught my attention with their long northerly vectors. And you can see that here is home construction, the broadline retailers index, and the home improvement index. So let's take a look here. Let's start with the broadline retailers. This is the group where we have Amazon and Alibaba, Big Lots, all these bargain stores, JD, Target, etc., Macy's. The thing about this, again, at first glance, this group already has several leaders that appear to be rapidly losing momentum. But these down here in this lagging quadrant are gaining momentum. Now, if I apply a size script here real quick, let's try to put this on here. I'm going to put my little market cap bubbles. Let's try that again. Let's put the bubbles on there. Well, that's not working. Oh, it's trying to, it's got to suck the market cap in. Anyway, what I was going to show you there, if that finishes while I'm talking here, is that Amazon and Alibaba are so large in the market cap that really the direction of most of the other stocks in this group is irrelevant. So that little animation didn't work there. Let's take a look here at the Amazon. Bennett pulled this up here. So Amazon has, I think, likely cleared this 6-month-long triangle consolidation period, and it's testing these resistance levels. If this is indeed the D wave here, it's still possible that D wave goes here. That wouldn't be invalid. This would just be a big complex correction. But if we're calling this finished, then we've got the next resistance level to test here is the B wave top around 3470. And if we get impulsive move, we've got much higher targets set here for Amazon. All right, let me get out of this. Let's go back down to, I want to take you down to the home improvement retailers, and that one is over here. So this one has got Home Depot, Lowe's, yeah, there we go, sorted by relative strength ratio. And you can see that same kind of thing here, right? These larger market cap stocks in this home improvement sectors are rising rapidly here. Let's take a look at the Home Depot chart. So Home Depot, I think, is testing this upside resistance, this downtrend channel. It's tested here, and so it's still in a wedge formation. Not yet confirmed on a breakout above this upside channel resistance, but this is the target area that we'll be looking for. Let's take a look now in the home builders. So every single one of the stocks shown in this industry group is seen with rapidly rising momentum. I'm going to animate this a little bit and take you back around to the 1st of January. I want you to see where these home builders were as we started the new year. Heavily lagging, weakening, but the formation of an initial hook, you can see the initial turn has already started. And these guys meandered over here into the lagging quadrant. But then now you can start to see the improving formation here as you're getting more northerly vectors. And now these guys are on a race back into the leading quadrant. I think it's kind of like watching a school of fish. This whole industry subgroup has suddenly gained momentum, rapidly pushing back towards the leading quadrant. I think we might need to take this list and apply some additional technical analysis, see if we can add some of these future leaders to our portfolio. So I think it looks to be another exciting trading week, guys, and that's all I've got for now. Back to you, Todd.
Thanks, Terry. Yeah, good work there on the home builders. I got to wonder, with rates backing up, are they going to kind of squeeze that off? But I don't think so. I think we're at a bigger shift here. Based on that Salesforce article we mentioned and the continued work at home. I know real estate is very busy up here in Saratoga and a lot of the neighboring areas. And hey, did you guys see that piece from the NYSE? They're watching some legislation happening in Albany that a financial transaction tax might take effect here in New York. And Albany, of course, is 45 minutes south of here. And the NYSE came back and said if they institute some kind of financial tax, the NYSE is no longer going to operate in New York because the remote servers are in Jersey. And the NYSE could leave. I thought that was pretty funny.
I love it. They're talking about coming to Texas.
Oh,
yeah.
Are they? Oh.
Yeah, we got real estate in Dallas set up. Dallas is really a pretty big financial center for Texas, so it wouldn't be unheard of to see some more of that. Hey, you got people remote working from home. Fewer and fewer people actually need to be in New York City to do all the work. It's all online. So,
it's interesting. Sorry,
yeah,
Todd. That Salesforce article that you mentioned, I was reading that last night, and it's like, clearly over the past year they've had a chance to evaluate their performance metrics, and it clearly, based on the fact that they're going to allow people to potentially full-time work from home, any offsets in productivity was, or any decline in productivity was probably offset in savings from not having thousands of employees on site. So it's interesting. It'll be interesting to see how many other companies follow suit.
And also, this whole narrative of Europe, and I forget which country specifically in Europe, working efficiently and productivity high on a 4-day work week. The two are happening at the same time where, okay, fine. If people working less at home, my wife just came down. The kids are jumping up and down, stomping on the ceiling above us. Like, I'm not going upstairs. Like, my ass is right here in the seat. Like, I'm not walking around in the office talking to everyone else and hanging out in the coffee room. Like, I'm not, so I don't know. I worked at home for 10 years, Ben, and I know you have. Harry, you just came home from the office. Like, I have no problem being efficient at home. And I think a lot of people who don't hate their job are as well. I like my job. So, I think we're going to shorter work weeks, and, I don't know. The world, this has changed the world forever. Guys, thoughts or move on?
Just looking through the comments. I think that about covers it. Yeah, and actually, to your point, there were some companies who actually showed productivity went up. So I think you're onto something there. So it's going to be fun.
Okay, so let's talk a little bit of crypto. And again, I'm just borrowing from Alex. His show will be tomorrow at 9. We're still on target for that, guys?
Yep, 9 Eastern tomorrow morning.
9 Eastern, perfect.
One piece of news on cryptos is the Ethereum has been added now to the CME, so you can do futures trading not only on Bitcoin but also Ethereum. Good
point there. Yeah, thanks for that. And again, Alex, our crypto specialist, will certainly fill in the rest. But the Ethereum project I know is very interesting. A lot of potential and new projects to be built on the Ethereum network. So where I am, is again, we identified the support down here into the 30,000 level. Bennett,
you want to take the screen? Take presenter mode?
Yep. Oh, can you flip it over to me? I don't know how this new GoToMeeting works. I don't get it.
I hate when they change the interfaces.
Right?
I'll give it to you here in just a minute.
All right. Yeah.
There you
go. Send us a memo. Number 3. Okay, here we go. So here's where I think we. And again, go to Alex for the real interpretation. But that move down into the 30,000 was a pretty easy pullback to see. This is the I keep doing that. Never mind. I tried to wheel scroll in to show the chart, but that's fine. You guys saw it earlier. So it was a pretty easy WXY correction to see down into the 30,000. I'm thinking this is kind of interesting here. It doesn't really look like a 5-wave move, but I'm going to go with it. Say it's 1, 2, and a small degree 1, 2. These little converging trend lines indicate leading diagonal 1. You can squeeze a 5-wave move out of there for 3, and then a potential pullback in wave 4. And how far will wave 4 go? Well, you look at prior degree corrective wave 2, and you also look at a retracement for 4 compared to 3. So you go ratio analysis 4v2. 61% of depth traveled in wave 2 is 43K, and 100% is 40K. And then you'll do a retracement of 3 into 4 and see if we can sort of build a zone. And I really like that when the 2 green and 2 blue levels come on top of each other. So shallow retracement maybe 43.8 to 43, and expected would be 41.2 to 42. So that's your support zone. And then the other thing that's prominent is in a good wave 3, guys, you'll never see trading analysis team label a wave 3 with subwaves 4 and 2 touching, or they really even shouldn't be close to each other. For a good wave 3, which is right here, your subdivisions 4 and 2 need to be removed because that's the very definition of a wave 3. So the wave 1 high is 38.6. And guys, this is how you say, look, I don't know what the future holds. Elliott wave is not the end all be all, the crystal ball, but the risk is very clearly defined. Support level 1 is 43.08. Support, 43.8 to 43,000. Support level 2 is 41.3 to 40,000. So here's your two support zones with risk at 38.631. And you might say, oh, I can't risk $5,000 in the underlying. Well, you could trade, 0.00001 of a Bitcoin and risk $50 in this if you want. That's the beauty of this. So that's where I think we are in Bitcoin. And again, tune in tomorrow to see if Alex agrees with that. Another thing I thought was interesting is, we're tracking Tesla. I've been a long-term Tesla bull. There goes the market. We're open. I read an article that was pushing back on Elon. He's trying to achieve 100% correlation to Bitcoin to Tesla. I thought that was kind of a foolish kind of thing. I don't think Elon is trying to get correlation. I think he's trying to continue to be the groundbreaking CEO that he is. I think it's just kind of. The two are sort of the leading edge of this digital economy that we're moving into. Tesla cars on top of Bitcoin. You can see there's a pretty good degree of correlation there. Bitcoin has broken out above the 43,000 highs as we just discussed, as Tesla has been largely range bound. So I'm definitely looking to get Tesla up and out, head up towards 1,000 in Tesla. So looking good there. I know they have some regulatory issues going on in China, some quality control, which I think is kind of funny, China being stringent on electronic requirements. But let's take a look at the open here, kind of get an idea what we see on the open here. S&P up 0.5, NASDAQ up 0.57. The RUT is up 0.7, so a pretty good broad-based rally. Gold's up 0.6. Bonds are flat. Copper's up 1.2, pretty good there. And TLT's up a little bit. Rates are dropping there a little bit. Let's look at the industry groups as well as the sectors. I always like to look at what's going on here. Just do a quick percent shift here. Communications up 1.06. Utilities in second place at 0.6. Materials and utilities, healthcare, energy, they're bouncing around there. There's the NASDAQ. We're all over the place. See, all the sectors are changing very quickly because this is a broad-based rally. They're all within about 10 basis points of each other on the day. The laggards are staples, industrials, and discretionary. That's interesting in discretionary. Let me just take a quick search there. XLY. What's lagging on discretion? GM reported. GM's down 2.6. Tesla down 1. Darden, Ford. So the auto stocks are lower, which is fine. DR Horton's down. Domino's also, I think, reported. Best Buy, that's fine. And then on the upside, Under Armour coming back there. I can't believe that company's down and out. I don't see that happening. And I know XLC was leading. Let's take a look at communications, who's leading on the upside today. Twitter makes sense there. Strong earnings report, up 11%. Facebook, Take-Two. Watch the video game sector, guys. I know EA just did acquisition of Glue Mobile on the expectation that a lot of gaming will be focused on mobile, which I thought was really interesting. So, yeah. All right, let's take a look at, let's see what cannabis is doing. I just want to check that till rate position because I'm going to be pretty close to max profit on that. And then Terry and Bennett, just jump in if there's something you guys are seeing that I'm missing here on the open cannabis stocks. Tilray up 40%. APHA 26. TerraTech 17. I mean, just pick one and buy them. It's unbelievable. It's unbelievable. These things are just ripping. Let me just check to see what positions are looking like here. This is a few of my portfolios. GM down, Tesla down. That's fine. Oh, Match coming back strong. Match.com, watch that one. I love that stock longer term. Tilray, getting close. I think the max profit's a $10,000. It's like a 9,500, so I'm at 76. Pretty good there. I need to stretch that short 32 call out. You know, I'll tell you what. I'm just going to take this back for now. I'm probably going to top ticket by me taking off my short strike. So just mark my words on that one. All right. So now I just have the long calls. I'm probably going to exercise. I was texting with a client last night, and he's like, I'm just going to take the shares. I'm like, fine, just go ahead and exercise and take your calls. So that's that. Let's see, Bennett, what are you watching here today? And I was going to mention also GME. Let me just get this out. I'm still short GME. I think the stock's going back to nothing. I appreciate what Robinhood did, but you know, I don't appreciate what Robinhood did. I appreciate what Reddit did. But you know what, guys, I think back to my freshman and sophomore summers. I was day trading online. I was day trading on an AOL dial-up in upstate New York. I didn't know it until the phone bill came. It was a long distance call to Albany. You know, I was following this guy named Tokyo Joe in a chat room. He was running up NASDAQ stocks, recommending him get his followers in. You know, I think we were paying him $100 or $200 a month, and then he was selling into us. Total scam. Guy got arrested. You know, I mean, so much has changed, but yet so little has changed in 20 years. So, guys, I mean, this is unbelievable what's happened, but I've seen this before. You know, there's no fundamentals in this, and at some point, fundamentals do return. This is not Bitcoin. This is not Tesla. I understand some younger traders with discretionary cash and a lot of time in their hands want to make a stand, but this isn't. I mean, unless they're adopting a whole new digital strategy or going to be bought out. You know, the insiders, the executives are just, they're going to use this liquidity to offset. You know, it's, I don't know. So I really don't want to see people get hurt, but you're swimming in shark infested waters here, and you can't get mad at the shark for biting you. So I still have 4. I bought 6 original Feb 2175 strike puts. You know, up $4,000, no big deal on that. Up 618 in the day, that's pretty cool. So I'm going to just continue to ride those. Those have a high delta, so there's no real extrinsic value that's kind of melting away. That's fine. That's absolutely fine. Okay. So, oh, looks like I'm taking it. Oh, no. Okay, got it. That $8,000 is because I covered I took my short strike off until I was like, why am I down $8,000? That's all. Bennett, Terry, closing thoughts. What do you guys think? Thoughts on the market? Thoughts on what's going on?
I'm just ride it while I can. I'm looking at NVIDIA right now, testing overhead resistance. You know, NVIDIA is another one that's been in a long-term consolidation since September, and it looks to me like we are pushing there.
It looks like we're about out there in NVIDIA. Yeah, NVIDIA looks good. AMD, a little catch up there. Not quite there, but it's going to be, you know, it's going to be a ways until we get into 100. Qualcomm pullback. Yeah, and that's what hit GM. Which, boy, is that going to be transitory or what? You know, that's a pretty good sell off in GM, which I do own GM. I wouldn't mind adding more. And then, the other thing I was going to announce is a trading analysis. So, guys, as you know, we're launching an RIA, money management firm. There's been a lot of interest. I've been working really hard building the portfolios that we're going to launch the business with. I'm not gonna give away the entire portfolio on trading analysis. I've decided that. But what I'm going to do is I'm going to carve out sort of a third portfolio, which will be a sleeve, will be a tactical, aggressive. In light of this sort of market environment that we're in, that there's a lot of small subset of industries and upstart and things that are moving, try to be very aggressive on a small percent of a portfolio and try to generate some return on there, try to generate some alpha on the 2 large portfolios that have between the two of them, a dividend and a value portfolio, about 150 stocks in there. So we are going to be doing a short to medium term swing trading portfolio trading analysis on top of the option trades that we're already doing. So those of you who are more interested in trading stocks, we're going to be launching that here in the next couple of days. So if that's something you're interested in, definitely check us out. It's going to give you a sort of a glimpse as to what the money management firm will be doing. So, guys, thanks for joining us. Terry, Bennett, take us into the close. Guys, if you don't mind, hit the thumbs up button, let YouTube know that you're paying attention, or at least you have it running in the background as you're doing something more important. Appreciate you spending your one day with us, and we'll see you at Trading Analysis. If not, we'll see you next Wednesday.
Thanks for tuning in, guys, and we'll catch you guys all next week. Todd, Terry, good show.
Great
See
job,
you guys all next week. Take care, YouTube.